Wednesday, the 18th of November. I am Bosin Amofaye, and a warm welcome to all our contributors and guest analysts on the show this morning. Let me start from Chima Okadike, who is in charge of consumer goods analysis at Vetiva Capital Management. Ali Sega is the managing partner at Sega and Associates based in Dubai, and Ayode Jiebo, head of macroeconomics research in Greenwich Merchant Bank. Thank you so much, all of you, for coming to this morning.
Thanks for having me.
Thank you. Thank you. We appreciate your time. We're looking at the Nigerian stock market yesterday and a few others. The South African bourse finished in the red, same as Nigeria, two of the largest exchanges on the continent. In the middle, you find Ivory Coast positive by 0.5%, Egyptian market slightly better, Kenyan market just shy of 0.03%, just around the flat line at 144.51. The rest of the North African markets finished positive yesterday. Tunisia was positive. Morocco stock market also finished in the green territory. Pullback from Nigerian market, Chima Okadike will tell us a bit more as we see investors pull back in the shares of international breweries, Guinness and Nigerian breweries as well. But let's go to the bigger story for Africa relating to the S&P Global ratings report about the global banking system outlook for 2020 over the next few years. Says the pressure will be there, at least for the next 3 years, but that the virus will keep Kenyan bank credit losses higher. This morning we saw announcement from the Kenya Commercial Bank that its net profit will be impacted by about 25%. Revenue collection in Kenya falls 10% to 378 billion shillings in the first half of 2020 to 2021, again, because of the lockdown, no businesses. So revenue will definitely be go on the decline. Ethiopia is moving forward with its privatization of national telecommunication company. Safaricom and Vodacom are making joint bidding. They want to get 51% of the Ethiopian telecommunication company under the privatization. But Safaricom, of course, will be the majority partner in that deal if it gets through with the authorities and Addis Ababa. And the problem in the Tigray region north of Ethiopia is continuing. The civil war is ongoing, the onslaught and the fight between the national government and the regional officials, which are called rebels by the authorities. Yesterday, the government freezed bank accounts of about 34 companies linked to the so-called rebels in the Tigray region. South Sudan is getting $52.3 million from the IMF to rejig its balance of payments. Very tough time for this Sahel region economy. Ali?
Yes, we can speak about the South Sudan story. In fact, I think it's quite interesting to see South Sudan, even if it's not really part of North Africa, but more on the South Africa part. I think the story about South Sudan is really interesting, because this is a country that suffers a lot, due to the, we can say, to the political instability and all this. We all hope that it will go better in the future. But to be honest, I think that it's more political than anything else. If Northern Sudan will stabilize, I think it will have big impact on the South Sudan market, in fact.
I agree with you. Since the split of the country between the North and the South, neither of both countries had been able to really stabilize so far. So they still have a whole lot in common, as it were. So if Sudan is not stable, then South Sudan is technically also unstable. But Ethiopian telecommunication privatization is a big story which we are watching very closely, with Safaricom coming through from Kenya as a big telecom companies, and Vodacom as well, making a joint bid. Whether the authorities will allow this major takeover by Kenya telcos will be anything that will live until the authorities decide. Nigeria's name was mentioned prominently in yesterday's S&P Global report as the one of the countries in sub-Saharan Africa where the banking sector will be most impacted by the coronavirus problem. The pandemic, according to the S&P, the countries will see low GDP 3% this year, 2% for 2020 to 2021 and 2022. Naira value will continue to depreciate, and the volatile oil prices will impact Nigerian economy and, by extension, the banking system. OPEC yesterday, the GMMC meeting, the joint monetary meeting, hammered on the COVID-19 risks and asked for stronger, strict compliance by the Saudi Arabia's oil minister Abdulaziz bin Salman. Russia says it will continue to cooperate, according to Alexander Novak, who is the energy minister for Russia. Algerian oil minister also spoke about the impact of the COVID-19 and what the Algeria is doing to also support the OPEC production cut agreement, which we expect to be reviewed or continue or extended when they meet finally on the 30th of November to the 1st of December. The COVID-19 is expected to hit Nigeria and Tunisian banks most in Africa, according to the S&P Global Ratings report. Good news for Nigeria: Togo is no longer bringing poultry imports into the country from the 6 European countries. We don't know whether this has to do with Nigeria's land border closure by the government, in which this poultry, turkey, chicken are brought into Togo and brought by land into the Nigerian market. Perhaps this Nigeria's land border closure is killing that business for Togo, since Nigeria is this major market, by the way. Ghana's Commodity Exchange and RDF are in bed. They are putting 1 billion cedis on the table to boost soya aggregation and warehousing and improve farmers' output in the West African country. And Mali is floating a bond loan, 100 billion CFA franc, within the UEMOA's region. Ayodeji, let me go straight to you first to speak around this banking sector report. Globally speaking, it's going to be tough for the next 3 years. That's what the report says, but Nigeria has its peculiar problem.
Yeah, very interesting view. And for us, when you also look at, especially for Nigeria, CBN has been proactive by allowing banks to restructure loans in form of forbearances. And when you look at the last MPC report, that about over 50% of the total loan in the system has been put forward for restructuring or to request for approval for forbearances. So that would keep the impairment charges low. And we feel that we very soon we may not see over time that impact would fade away. We've seen that despite the COVID-19 pandemic this year, you would notice that a lot of the banks, when you look at in terms of profitability, they have also been able to weather the storms. Two major factors have contributed to that. You want to look at the yield environment, so it favored them. A lot of them were keeping bonds at double-digit rate levels, and looking at the current level at very low rates now, it's a lot of capital gains for them. And also the devaluation, the adjustment that we had earlier this year also impacted on a lot of banks that are long in dollar assets. So that has covered that major shock that we should have seen, that major drop in the interest income, because what that forbearances have done is there will be some form of moratorium that might be given to some of the for customers that for them not to pay interest or service their loan for a particular period, pending when businesses pick up. So by and large, I feel that we have that strong buffer compared to the crisis in 2007, 2008. When you look at the capital adequacy ratio of most of the banks are around the 15-16% levels. When you compare that to what is required by Basel, I think is around 10%. So we're adequately strengthened to be able to weather the storm or to be able to cover this potential risk. And the CBN has continually monitor the trend in terms of non-performing loans.
Okay, so but again, when the economy continues to perform, are below par, as it were. And that's why I'm asking Chima Okadike this in consumer goods. When disposable income becomes stressed, inflation is going high very rapidly, as we saw October numbers in just about 2 days ago on Monday. And you look at the level of insecurity across the north, west, east, north, central, and kidnapping of farmers, extortion of farmers to even harvest their produce, according to a BBC. All these are happening there. So when you look at all of this, how much more do you think the economy can take before the banks will begin to feel some of this pressure, even for loans and impairment provisions have been made, because banks cannot forever continue to make impairment provisions. At some point, they will have to let go of this money. That is a real risk ahead. Chima.
Exactly, Gosling. I think that the banks are probably going to face a lot more challenges if we given an expectation of continued increased inflation for consumer wallets. People will still try to take out more loans because they have to make ends meet. As we see that disposable income have continued to reduce given inflation and lowered economic activities. So I think for people to be able to augment their expenses as things get more expensive, normal people will need to look to more loans from the banks. And the banks are already under pressure. We can see, given the slowdown in the economy, the slowdown in the oil market, they have a lot of loans to the real sector and the oil sector. So I think they're already under a lot of pressure, and I'm not sure how far they can maintain loans to even the consumer sector of the economy.
Okay, yes, Ali, I can see you nodding. And when you talk about these risks, insecurity is a major problem. I know when you talk about risk, you have that under your cover on a daily basis.
Yes, I think the S&P report is quite we can say interesting for all this kind of stuff. About the COVID-19 situation. It says clearly that it will last at least 3 years. The impact of the economy. It also says that the SME sector is quite impacted by the COVID-19, and at the end it will impact the bank financials, because if SME collapse, also the bank financial will decrease. In fact, the bank financial, we can say, statement will worsen. In fact, there is also some good news also on the report. In fact, there is one, we can say, if we take out of all these bad news, there is one good news. You see that they say that the pandemic has accelerated the bank's digitalization and could trigger another round of restructuring and consolidation. I think it's deeply needed, especially in North Africa, that you have a lot of different banks, a lot of different small banks, and perhaps the consolidation will be better also to grow externally at the end, in fact, because the North Africa market is quite small. So they need also to develop internationally and to be better managed, in fact, in terms of digitalization and in terms of all that. So I think this pandemic will have bad consequences, but at the end and on the long term will have better consequences, in fact.
So thank you for bringing on the issue of digitalization. I'm sure Nigeria is up on that, Ayode Jebo. But again, when you take a look at some of Nigerian banks, perhaps they are reacting and being proactive in going a holdco structure. Look at GT Bank, those announcements. Access Bank talking about just appointed a new executive director for African subsidiaries. A couple of months ago, about 4 months ago, UBA did a massive restructuring across this Europe, US, and African space.
Yes, interestingly, the dynamic of the sector is changing. When you look at where most of the banks, where they make their money from, especially from government securities, that's been taken away. You also want to look at currently the discretionary cash reserve ratio, the debits that for most of the banks, for that has also been affecting the structure of the business. So for them to also ramp up their non-interest income or non-interest revenue, most of them are adopting that holdco structure. We can see the likes of Stanbic Bank, when you check their non-core, non-interest revenue to total revenue is very significant, and that has been serving as a buffer for some of the income gap within the interest income space. So would see that the business structure would be evolving, will be changing, and most of the banks are adjusting to this new reality. And we believe that that would be sustained. We feel that even in the first quarter, we'll see more companies trying to adopt that holding structure. So that what that does is that you are able to retain the turnover on a particular transaction that you get, and you also retain that revenue. There's a larger chance of doing that, and that would impact positively on the top line of the banks.
Okay, interesting. Thank you so much for your thoughts, everyone, on the banking industry and the S&P Global space. Ali will speak more to the North African markets in just a second. But today is a big day for South Africa. In about 2 hours from now, the South African president, Cyril Ramaphosa, His Excellency, will be declaring or will make the opening speech at the South Africa's annual investment conference. South Africa is still advertising itself as the destination for investments. This morning, the head of the stock exchange of the GSE was speaking to Bloomberg about the rand and what the future means for the South African equity and debt markets, with the pressure that we are seeing on global demand for supply chain and commodity prices. Gold has been up, but again, what about platinum, aluminum, and other metals that South Africa produce? What the unemployment will mean moving forward? So expecting to hear from President Ramaphosa what else he has to say after he introduced and laid before everyone the next 5-year plan of economic recovery, which was just about a month ago. The S&P report said that South African banks will be least impacted by COVID-19. In the corporate news, Pick and Pay launching as the MTN's first mobile virtual window. Rhodes Group says its profit after tax up 0.3% year to date. Old Mutual doing about 2 billion rand via bond issuance amid the COVID-19 pandemic. And Naspers is reporting its numbers, I guess, next week on the 23rd, and is issued a statement yesterday that his profit could go down 7.5% because of the spin-off of Prosus, which as a subsidiary are now fully listed on the Amsterdam Stock Exchange. Let's go to North Africa very quickly and touch on some of the big stories that we're following, in particular the Egyptian and Tunisia banks, which the S&P says will be most impacted by the COVID-19. The Moroccan banking system will be the least affected by the virus, according to S&P. Just to ask Ali, how Morocco will be different from the rest. Tunisia's Office Plus turnover falls 8.83% during the period in third quarter. Morocco Stock Exchange also in the news, creating a new Principal F sub-fund window for securities. Ali, this is your ball. Take it from here. The ball is in your court.
Thank you very much. I will especially discuss of the S&P, in fact, because I think it's the most interesting story about all that. To say that Morocco will be the least affected, it doesn't mean it will not be affected. It will be affected, but less than the others. So it's quite interesting also to see that S&P turn it like this. In fact, it will be affected. The issue in Morocco, this is mostly on the property market, in fact, and on the SMEs. So the property market has decreased a lot in Morocco, because you have less tourists in Morocco, you have less, we can say, consumption, internal consumption in Morocco. It will impact all this SME and tourism sector, in fact, and property also sector, because a lot of expats, for example, or tourists in France or in Europe, mostly going to Morocco and buy some property there, and they are not able to do it for this year and perhaps for the next 3 years, in fact, to be honest with you. So I think it's quite interesting to know that, in fact, to understand that it will not be as much as impacted as Tunisia and Egypt, but it will be impacted. Tunisia and Egypt, to be honest, the situation is more critical. You have some government support there, but it will not last long, in fact. They supported since the month of March, the banking sector and all this. They said to all SMEs and even to big corporate, yes, don't reimburse your loan now. You have till the end of the year, but what happened after the end of the year? It's a big question mark on all this market, because at the end, the bank will need to get back its money. So either the company collapsed or the bank collapse. So at the end, a choice will need to be made by the regulator, we can say, in all this country. Either they will sacrifice the banking sector, or they will sacrifice, we can say, the corporate sector. But at the end, something will need to be sacrificed. I think this is where we can say the consolidation of the sector need to be taken, in fact. I think we can say the bad loan bank will need to be created in all these countries, especially in Tunisia and in Egypt. We can say to segregate the bad loans on this country with the rest of the economy of the country. So this is, we can say, ways of improvement of the banking sector. And as we discussed before, the digitalization will impact a lot of this, we can say, sector, but the digitalization will have also impact on the job on the banking sector, because if you say yes, we speak about consolidation or about digitalization, at the end you will need to get rid of some people in the banking sector in all these countries, in Morocco, Tunisia, and Egypt. So this is a big question mark on the banking sector. This is, will it survive to this crisis, and what will be the new banking sector in all these countries?
Thank you so much, Ali, for giving us a very nice picture there. Chima Okadike, look at the market for us very quickly and give us a sense of where you think things will go with this whole about, because again, it comes to currency, exchange rate, consumer goods. The government is trying to spend some money, the youths, agriculture, the central bank. Yesterday makes I think about the 5th anniversary of the Anchor Borrowers Program by the Central Bank of Nigeria. But again, when you look at international bureaus, Nestle, Cadbury, and the rest, the numbers look good so far year to date. But how much longer do you think things will hold on before it starts impacting how the market perceives these companies in terms of their fundamentals?
I think not a lot has changed in terms of how investors perceive these companies. We have seen that for many of the bureau guys, for Guinness and Nigerian bureaus, for example, we saw their numbers increase in Q3, which lifted their 9 months figures a bit. But we know that it was mostly because of the delayed demand that we saw during the Q2 period, and the Q3 period then made up for it. So we still expect a lot of challenges for the brewery sector. There's still income deficit, there's still pressure to income levels. There's still, even though we are now out and about, the demand in on-trade sales depots for alcohol is still not as strong as it used to be, or as strong as it can be. We are hoping, or we are optimistic that Q4 will be a better year as we go further into the festivities. But not a lot has changed in terms of how investors view this sector in terms of demand. Maybe 2021 will be better, but right now I think it's still the same. But speaking to the rush we had seen in terms of stock pricing by investors, we noted that it was because of the low yields in the fixed income market. Granted, we're seeing profit taking over the past 2 days. We've seen some profit taking, which today everybody is in the red, all sectors are in the red. Yesterday, only the banking sector was able to show positive, to come out positive, and yet today the economic sector is back in the red. So I think for yesterday, or for the 2 days past, I think where investors are beginning to have some bit of hope for the fixed income markets, especially as we have a bond auction today, and they are hoping that they might be able to see better yields somewhat in the fixed income market. I think that's why we are seeing some profit taking in the market over the past 2 days. However, I still think there will still some return to the market after this, because there still isn't a lot of other avenues for investors to place their funds. So I think we'll still see a return to the equity market. However, as advised, we'll continue to urge investors to take a cautious stance, because nobody knows when when sell-offs will start, and it just takes one very large investor, and a lot of people are on the sell side. So I think we'll still see demand for the equity market, but maybe off and on as it works in tune with the fixed income market.
Interesting. Ayodeji, give us a closing part in short about around what we expect today from the debt management office. The DMOs putting about 80 billion naira on the table for November's auction. Where are we on the fixed income street?
Okay. Interestingly, when you look at the trend, you look at it vis-a-vis the liquidity levels in the system and maturities. And when you check this week, they are still invested funds. And for us, we believe that as a result of that, yields will also trim lower, even at both ends of the curve because of the liquidity. What is the scenario? What we're having or what's happening in the system now is because of the current debit DCR, that's the discretionary cash reserve ratio from the CBN. Even banks are not willing to hold deposits. So the PFAs are in a very tight corner that banks are not willing to take deposits from them. So they have to find a way to channel these funds in. And that is why you continue to see people bidding for 90-day at 0.00. Rather than get that debit from the CBN, you would still want to invest it in an instrument that would keep the funds. So if it's not, though it may not be earning anything meaningful, but you still need to just keep that fund in something that it's allowable. So that's our own forecast, is that there will still be there will be further moderation in those rates at the end of the auction today.
Thank you so much, Ayodeji Ebo, Head of Macroeconomic Strategy and Research at Greenwich Merchant Bank, Chima Okadike from Betiva Capital in charge of consumer goods analysis, and of course, Ali Sega, Managing Partner and consultant at Sega and Associates based in Dubai, UAE. Thank you so much to three of you. Have a great day, and thank you so much for your thoughts. We'll see you again tomorrow, Thursday, same time here on Frontier Africa Reports.